markets in Australia and New Zealand seems to be easing after a flurry of capital raisings and mergers and acquisitions during the peak of the pandemic. To discuss what's happening in equity capital markets this year, I'm joined by Jarden's Head of Equity Capital Markets, Chung. Henry, thanks so much for joining us today.
Thanks for having me, Maddie.
How would you describe the current climate and conditions in equity capital markets this year?
Sure to say conditions have been quite volatile with macro fundamentals such as central banks raising interest rates, consumer sentiment at all-time lows, as well as an ongoing war heavily weighing on investor sentiment and issuers as well. So in terms of what we're seeing this year is a lot more reduced activity in respect of IPOs. There's been one IPO across Australasia this year, above 50 million. But we have seen a number of follow-on issues, so rights issues and placements, of note in New Zealand, New Zealand's $1.2 billion recap. So challenging market for us to be issuing capital into.
How does that compare with, say, the past 2 years?
Quite different. So if we think about sort of the volatile nature as well of 2020 on the early onsets of the pandemic, companies reacted quite quickly and raised quite a lot of capital to get their balance sheets into check. Some of them lowered their levels of gearing to sort of zero or sort of record lows. Which, in some respect, though, puts them in pretty good stead for this year if that plays out in terms of a downturn. 21, we start to see sort of a resurgence, really, in sort of growth raisings. Global IPO activity was at a record high. It was US 600 billion raised. That's about 3 times sort of against the 5-year average. Less so in New Zealand in terms of IPOs. But all in all, a good level of activity across the game, rights issues, placements to fund growth.
Is equity market volatility that we're seeing this year altering M&A behaviour that you are seeing?
Definitely the re-rating in the market right now is making some companies look cheap. You've got large pools of capital sitting out there in terms of private equity and sovereign wealth. And with the sort of re-rate in certain sectors, take for example Pushpay in the tech sector. They've been heavily impacted by the likes of the NASDAQ comps trading down, but it's quite a different situation. We're actually generating quite a lot of cash on the bottom line. So you will have a lot more sort of sponsor interest in assets like that, which are generating more cash as market volatility remains.
More takeovers to come, you think?
I think so, yeah.
Thanks much for joining us, Henry. Appreciate your time.
Thank you.